Welcome to another FAR walkthrough video. I'm Logan, and in today's video we're going to be going over FAR Area 2, and this is our first video for FAR Area 2, and this is Section A, and it's an analysis topic. Reconcile the cash balance per the bank statement to the general ledger. And we're going to be doing that the SuperfastCPA CPA way, which is diving straight into questions to learn the material. If you don't know much about our strategies, make sure you go check out our free 1-hour webinar training. We will teach you the key ingredients to passing the CPA exam, one of which is going to the questions first, and other things like studying in the morning or making sure you review every day. Things like that, make sure you go check out the webinar and we'll teach you more. Also, just letting you know, we will only be going over 5 questions in today's video, but SuperfastCPA Pro members will have access to the full 10-question video when we post it in the members forum. So if you like this, if you like our other videos, or you like our product in general, just remember that you can get access to the full videos by becoming a SuperfastCPA Pro member. With all that said, let's dive straight into the questions. All right, here we are at question 1, and as we're diving into these questions, there's one thing I want to say. This is an analysis topic, which means it's going to be tested as a sim if it's tested. So I tried really hard to cover things that I think would be covered in a sim if you saw a sim for a bank rec. And I also tried to make the multiple choice questions kind of similar to a sim, or at least part of a sim. So just letting you know that in advance. Let's go ahead and read the question. Something we always like to do is read the last part of the question. Now, in this case, it's not that helpful. Which of the following is correct? That's not super helpful, but a lot of the time you will get a lot of context from reading this last part so that as you're reading through, you can know what you're looking for. But in this case, that didn't happen. So let's go ahead and start from the top. Given the bank statement and general ledger excerpts below, identify which of the following items is missing from the general ledger. Okay, so we need to figure out what is missing from the general ledger. So we have a deposit on the 3rd of December, $42,500. We have a deposit on the 6th of December. We have a check that was taken out on the 19th. We have another check that was taken out on the 28th. That's according to the bank statement, right? Now we look at the general ledger. We have the same journal entry for the 3rd, and that was a debit. We have a journal entry on the 6th for the same amount as up here. We have the 19th, which is this check and this check, but wait, those are different check numbers, so that's different. And then the 28th is another journal entry that seems to match this one here. So obviously something is different here and here. So which one of these is going to be the one that matters for this answer? Now it's asking about items missing from the general ledger. So if this is here in the bank statement, but it's not here in the general ledger, that would mean that it's missing from the general ledger. So the answer should be A. So let's go ahead and go to the answer to see if we're right and kind of learn a little bit about how to do a bank reconciliation, and we'll definitely learn more as we do more questions. All right, here we are. The answer is A, and we were right. Check 1110 is missing from the general ledger. And that one was pretty easy to spot. And this is kind of what I wanted to start the whole video with, is showing you that this is a key part of the bank reconciliation when you're comparing it to the cash for the general ledger. You want to first compare all of the things that are in the bank rec and all the things that are in the general ledger to see which ones match and which ones are not in, say, the bank rec when it's in the general ledger, or vice versa, things that are in the bank rec but not in the general ledger. So this is an important step in doing a bank reconciliation, is comparing the two. So let's walk through this. Reconciling the book balance to the bank statement involves comparing transactions in the bank statement with those recorded in the general ledger. That's pretty clear. In this case, check 1110 appears on the bank statement but is not recorded in the general ledger, so it's missing from the general ledger. That's why A was correct. Check 1111 is recorded in the general ledger but not on the bank statement, so this would also need to be addressed. So this, in a full bank rec, that would matter. However, the question only asked what was missing from the general ledger. But you probably noticed that along with me, that check 1111 was included in the general ledger but not in the bank statement. So that's something that you would need to pay attention to normally. The rest of the deposits on the 3rd, the 6th, and the 28th of December, they were recorded in both statements, so we don't need to make any adjustments for that. So again, this was just a simple question to kind of get us started. This is something you always need to do if you see a sim for a bank rec, you're going to need to compare the general ledger to the bank rec. This is one of the first steps. Now let's go to the next questions to learn other things that you might have to adjust or pay attention to. All right, here we are at question 2. As always, we always like to start with the last part of the question. Which of the following is the correct ending cash balance for both the general ledger and the bank statement as of 12/31? Okay, so now we know that we're going to need to figure out the ending cash balances for both the bank statement and the general ledger. So that's something that we need to know. So let's go up to the top here. The following bank statement and general ledger excerpts are provided for Stone Corp as of 12/31 for the year. The beginning cash balance at the start of December was $15,000 for both the bank statement and the general ledger. On December 31st, one of the checks issued by the company, check 1050 for $2,500, was voided by the company but was not yet recorded as voided in the general ledger. Okay, so we know that they start at 15,000. Each of these starts at 15,000, which makes sense because it hopefully would have been reconciled at the end of November, right? So they start at 15,000. And the thing that we're needing to pay attention to here, in addition to all the rest of this information, is that check 1050, and we'll look for that as we're going through this, was voided. So let's go through this. The bank statement, they had a deposit of $10,500 on the 10th. They had a deposit of $6,250 on the 15th. They had check 1048 taken out for $4,800 on the 20th. They had check 1049 taken out for $7,600 on the 28th, and they had a deposit of $8,200 on the 30th. So we have all that information. Now we need to look at the general ledger as well. They had a deposit on the 10th, which seems to match there. They had a deposit on the 15th, which seems to match there, same number, right? They had a check taken out on the 20th for, looks like the same amount, and it was the same check. They had a check taken out on the 28th for $7,600. Oh, yep, that looks like it's the same. They had check 1050, which they took out on the 29th, and it looks like, and if you're paying attention, that is the one that was voided. So what does that mean? We probably are going to have to learn that in the answer, but this is the check that was voided, and this is also not showing up in the bank statement. So there's probably a reason for that. And then there was a deposit on the 30th that matches up here compared to the two. So it looks like everything matches between the two other than this check 1050. So now we need to know what is the ending cash balance for both of them. You probably need to add it up. So if you know how to do this, if you have a general idea, pause the video and do the calculation yourself. And if you don't know how to do it, or especially if you don't know how the voided check is counted, that's okay. We're going to look at the answer together to learn how to do it. All right, here we are. The answer is D. The general ledger ends with $27,550, and so does the bank statement. So let's walk through this. This isn't exactly how you do a cash reconciliation. A lot of the time, you usually start with the ending balance and then do adjustments from there. But I wanted to, with this question, make sure you knew how things work in the general ledger and how they work in the bank statement. Basically, deposits are additions and checks taken out. And so when you see a check, that means that money was taken out. So that's something I wanted to show you. So what we do is for the general ledger, we take the initial $15,000, we add all the deposits, and that gives us $39,950. And then we subtract all the checks, including check 1050. That's what this one is right here. And that gets us to $25,050. But, and this is the key part of this question, because check 1050 for $2,500 was voided and not yet recorded in the general ledger as voided, we must add it back to the cash balance. So what does that mean? That means that a company sent out a check to pay somebody. The check either didn't make it to the client or the client never cashed it or whatever the case may be, and then the company voided it or said, this check is no longer good, you can't use this check. So what happened is when they wrote the check, they, in their general ledger, took it out of their cash, and so they subtracted it here. But once they voided the check, nobody's going to be able to use that check, so they need to put the money back into their account so that their cash increases back to where it should be. So we add it back because it was voided, and that gives us $27,550 in the general ledger. Now, going to the bank statement, we do the same thing as we did above. We add all the deposits together, and we subtract all the checks recorded. But you'll notice something, that the bank never recorded the check. They never recorded the money leaving the account for that check. If you think about it, the bank is not going to take money out of the company's account until that check is cashed by whoever they sent that check to. So if they were able to void it and no money was taken out before it was voided, that means that the bank never took any money out of the company's account. So there was no adjustment needed because they never subtracted that check from the company's cash. So you'll notice that here, that check was never included. It was never presented to the bank because it was voided before money could be taken out. So it does not impact the bank statement balance, but it needs to be adjusted in the general ledger. That's what we did up here. So this was actually pretty straightforward once you understand how a voided check works. The ending cash ends up the same because the bank was always correct, at least in this case. They just added all the deposits, they subtracted all the checks that actually got taken out of the cash for the company. So they were already at $27,550, but the company did record the cash being taken out when they originally sent out the check, but they had to, because they voided it, add it back. So that's how you would treat a voided check. Let's go to the next question to learn about another part of the bank reconciliation. All right, here we are at question 3. Let's read this last part here. What will be the impact on Garner's general ledger cash balance and bank statement balance as of 11/30 if this is recorded correctly? So let's look at what it's talking about, but we're trying to figure out the impact of whatever we're about to read. Garner Co. received a check for $5,000 from a customer on 11/15 and recorded the amount in the general ledger as a cash receipt. Garner deposited the check into its bank account, but on 11/18, the bank returned the check due to non-sufficient funds, or NSF. That's something that you're definitely going to see if you see a bank reconciliation, is the term NSF. And what does that mean? Again, it means non-sufficient funds. Okay, so what is the impact of this non-sufficient funds check being returned? How is that going to affect the general ledger cash balance and the bank statement balance? Now, if you have an idea of how this works, or if you kind of think about how banks and checks work, you probably could figure this out. If you want to, pause the video and do the calculation. If not, that's okay. We're going to look at the answer together. All right, here we are. The answer is A. The general ledger cash balance will be $5,000 lower after this adjustment, and the bank statement balance won't change. So let's walk through why that's the case. For the general ledger, when Garner initially received the $5,000 check, the entry was recorded as a debit to cash and a credit to accounts receivable, most likely because they were waiting for that cash to be received, increasing the cash balance in the general ledger by $5,000. However, since the check was returned due to non-sufficient funds, or NSF, the cash was never actually received. So they didn't actually ever get that money, they just thought they did because of the check. Garner must reverse the cash entry, resulting in a $5,000 decrease in the general ledger cash balance to get it back to where it should be once that check was returned because they didn't have enough funds. Now for the bank statement. Again, this is kind of similar to the voided check where the bank never recognized this because the bank is the one who said there's not enough funds, so we're not going to give you cash because they're the ones who figured that out. The bank never increased the cash balance because the not sufficient funds check was not honored. Thus, the bank statement never reflected the $5,000 deposit in the first place, and there is no change to the bank statement balance. So you have to kind of think about how banks work compared to the general ledger. And this is something that you'll notice if you ever do a bank rec, is the bank only has to correct things that either checks that weren't deposited or checks that they missed being taken out. That's the only adjustments that a bank is going to have to make. And you'll notice that in the next questions. Whereas the general ledger might have to do some things if they decided to void a check, or if it turns out that a check didn't have sufficient funds or things like that, the general ledger might have to make a little bit more adjustments. But that's the idea behind a not sufficient funds check. Let's go to the next question. All right, here we are at question 4. Now let's read the last part. How will the $35 not sufficient fund fee affect Leland Co.'s general ledger cash balance and the bank statement balance on it once it is correctly recorded? Okay, so there's going to be a fee, so let's read the rest of this. On 7/12, Leland Co. received a check for $3,200 from a customer and recorded it in the general ledger. On 7/15, so 3 days later, the bank returned the check due to non-sufficient funds. Again, that's NSF. Leland Co. immediately adjusted its general ledger to remove the $3,200. So they did the correct adjustment for what we just learned about. However, the bank also charged a not sufficient funds fee, which has not yet been recorded in the company's books. So they didn't record the fee that the bank charged because of that check bouncing. So what happens? How does that affect the bank statement? How does that affect the general ledger? It's pretty simple if you think about it, or just based off what we read. But again, this is something you need to know how to do. So if you want, pause the video, or if you need to, again, pause the video. But if not, if you already know the answer, that's okay. We're going to look at the answer together to see if you're right and to learn a little bit more about this. All right, here we are. The answer is A, the general ledger cash balance will be $35 lower because of the fee, and the bank statement balance won't change. So let's walk through this to kind of understand why that's the case. When the bank charged the $35 non-sufficient fee, it reduced Leland Co.'s cash balance in the bank. So they lowered it. However, since Leland Co. has not yet recorded this fee, the general ledger cash balance still shows an amount that is $35 higher than the actual bank balance. Once Leland Co. records the fee, the general ledger cash balance will decrease by $35 to match the bank balance. So they didn't record it, so they have to subtract it. That makes sense. Now, this is the part that you need to make sure you pay attention to. And this is, I think, going to be the case most of the time, but again, with a sim, it could be different, so make sure you pay attention to the exhibits. But if you think about it logically, the bank statement has already included that fee because they are the ones who charged the fee. So unless they majorly messed up, which is possible, they already charged that fee and they already took it out of the person's account. So the bank has already reflected the $35 fee. The bank statement balance doesn't need to change. And they also never recorded the non-sufficient funds check. They didn't deposit it because they're the ones who knew that there wasn't enough funds. They're the ones who found that out. So they never recorded the non-sufficient funds check, and the general ledger has been corrected for that. And the bank already recorded the fee because, again, they're the ones charging the fee. And so the general ledger just needed to reflect that fee. So the bank statement won't change because of the fee because they already recorded it. So that's usually going to be the case. All right, let's go to the next question. All right, here we are at question 5. Let's read this last part. What should be the correct ending cash balance for both the general ledger and the bank statement after all adjustments are made? All right, so we need to figure out the correct ending cash balance for both the general ledger and the bank statement. And again, just to point this out, they should end up the same. So that's why all of these are single numbers, because in the end, they're supposed to be the same. That's why you're doing a reconciliation. So let's go up here. The following bank statement and general ledger excerpts were provided. The ending cash balance was $8,465 for the bank statement. So that's the ending cash that they had recorded. And it was $6,900 for the general ledger. So by the end of November, this is what they had recorded. Now, during the month, these are the things that occurred. And what we're going to have to do is we're going to have to look through these and see if anything is missing or anything needs to be adjusted based off of the information we're given. So we have the bank statement excerpts. I'm going to let you read through that. And the general ledger cash account excerpt, again, I'm going to let you read through that. But let's read the additional information together. Check 210. So make sure you look for that as you're reading through this. Check 210 was $1,800, and that was voided by the company on the 18th. So we talked about voided checks in a previous question, so pay attention to that. And on the 13th, there was a check for $3,000 that was returned due to non-sufficient funds, and the bank charged a non-sufficient fund fee of $35. And if you pay attention, you'll notice neither of those are up here. So I'm just giving you a little freebie there. So you're going to need to read through all this information, take account of the things that are the same between the bank statement and the general ledger, and especially the things that are missing between the bank statement and the general ledger, and then take into account this additional information, which tells you how to treat some of the transactions that happened. You're going to need to pause this. You're going to need to do the calculation and maybe write some things down to figure it out yourself. This is question 5, and it's kind of taking everything into account that we've learned so far. So again, I want you to try it yourself. Pause the video, do the calculation, come back when you're ready. All right, here we are. The answer is A, $9,165 should be the ending cash balance for both the bank statement and the general cash ledger. So let's walk through this. Again, this is much more similar to an actual bank rec than the other questions. The other questions were kind of just showing you different pieces of it, but this is basically a full bank rec right here. So let's walk through this. So the answer, they're supposed to end with $9,165, but we need to know how to get there. So we need to know the general ledger adjustments first. So let's talk about them. There's the void check that was voided, number 210. You have to add that back to the general ledger, remember, because they sent it out. They thought that somebody was going to get that money, but then they decided to void it, so they need to add it back to their general ledger. They get that cash back. The bank never recognized the check because it was voided before it was cashed. No money was ever taken out of the bank account, so they never recognized that check. The not sufficient funds check, that since the customer's check was returned, they have to subtract the $3,000 from their general ledger because they thought that they had that money, but turns out that check bounced and they don't actually have that money. So, and again, the bank statement never recorded this because they're the ones who found out there wasn't sufficient funds, so they didn't deposit it. And then the bank did charge a fee. That wasn't recorded in the general ledger, so we have to adjust that. We have to subtract that from the general ledger. Remember, the bank statement will have already adjusted for it because they're the ones charging the fee. Then there's check 213. This check, and if you took notes about this, this is one of the checks that was recorded in the bank statement but not in the general ledger. And since it's a check, just remember, when a check is mentioned in the bank reconciliation and the general ledger, that's saying that money was taken out. Check 213 was taken out, so that's money that needs to be taken out of the general ledger. And then there was a deposit on the 28th for $6,000 that was mentioned in the bank statement. So we have to add that to the general ledger. So with all these adjustments, we start with the $6,900 cash balance that they had at the end of the month without these adjustments. Then we make the adjustments. So we take $6,900 plus the voided check being added back, less the non-sufficient funds check actually being subtracted because they didn't actually get that money, less the fee for that non-sufficient fund, less the check that they hadn't recorded being taken out, and then you add the deposit that they hadn't recorded. So with all that together, you get $9,165 as the ending cash balance for the general ledger. Now let's walk through the bank statement adjustments. And again, this should end up the same. The bank statement adjustments, and again, we're starting with this ending cash balance that they had before any adjustments. They had $8,465. So now we go up here. There was a check that they hadn't recorded in the bank that was taken out. So since that was in the general ledger but not in the bank statement, we subtract it from the bank statement because, again, when it says a check, that means a check was taken out, a check was cashed. Deposit on 11/25, that was $2,200. So that was a deposit that, again, was in the general ledger but was not in the bank statement. So we have to correct the bank statement there. So we take the ending cash balance that the bank said, less the $1,500, plus the $2,200 deposit, and that gives you $9,165. And if you'll notice, this $8,465, the reason that it's at that number already is because they already took into account the fee that was charged. That's just kind of like an automatic thing that's going to happen when these non-sufficient fund fees happen. They're just going to take it out. So their ending balance is going to most likely incorporate that already. Maybe you'll see a sim where you have an exhibit that mentions that they didn't take into account the fee or whatever, that's possible. But usually that fee will have already been taken out immediately by the bank. So they already have taken that into account. So that's why this number has that $65 because they took the $35 out. But with that, we do these adjustments and we get the same amount. And again, that's how it's supposed to be. The bank statement and the general ledger are supposed to end at the same number. Now, again, we went over a lot in just 5 questions. This question was basically a full bank rec, going over all the adjustments in one question. Before we go any further, let's do one more part of the SuperfastCPA CPA process, which is called pillar topics. Now, the idea behind pillar topics is as you're going through the questions to learn the material, you will notice the things that keep popping up. You will notice, oh, hey, I've seen things trying to teach me how non-sufficient funds checks work or how the fees work, or I'm seeing questions that are trying to teach me or this sim is trying to teach me how all of these different pieces of the bank rec work. That's how you're going to learn how to do the questions by doing the questions as practice. So you'll notice these pillar topics, you write them down in your own words as a summary so that you know as time goes on the most important things that you've learned from each topic so that you're ready for test day. Let's go ahead and look at the pillar topics for this video. All right, here we are at the pillar topics, and the way I made these pillar topics this time, I tried more to focus on looking at it as topics or key points for how you would do a sim, because this is an analysis topic, so pretty much guaranteed if you saw something about a bank rec, it would be in a sim format. I know we did multiple choice questions in this video, but I feel like we still learned how to do it. So I made these pillar topics based off of that premise. So the first pillar topic, you want to compare the general ledger and the bank statement. So take the bank statement, take the general ledger that you have, compare the two, identify any amounts that are missing or that are different or that are included in one but not the other. So that will let you know some adjustments that need to be made. Also, you need to look for, and again, same idea here, unrecorded transactions. You need to adjust for those items that are mentioned in the exhibits that have not been recorded in either the general ledger or the bank statement, or not recorded in both of them. The exhibits will tell you most of the time, if not always, extra information that you need to know. hey, this happened and it wasn't recorded in the bank rec, or it wasn't recorded in the general ledger. Or maybe you'll even see an exhibit that says, hey, this number is actually flipped. It's actually wrong in the bank statement, but it's correct in the general ledger, or whatever the case may be. So you want to look through the exhibits to not only know what the general ledger and the bank statement are saying by comparing them, but also any other additional information. Now, when it comes to voided checks, remember that you add back voided checks to the general ledger if the check has not been cashed or deposited, because at that point, if the person you sent the check to has cashed it or deposited it, you can't void it because they already took your money. But if you void it before that happens, then that needs to be added back to the general ledger. And again, the bank's not going to take that into account because they are only going to care when the money is actually taken out of your bank account. And then the non-sufficient funds checks, these are added at first because, it's just a normal check to you, but then you have to actually deduct them when it comes back as a non-sufficient funds check because, again, the general ledger already recorded it as cash, but they didn't actually get that money, so you have to take it out. And again, the bank is not going to actually record that non-sufficient funds check because they're waiting for that money to actually get added to the bank account. But when it comes back as a non-sufficient funds, they never add money to the bank account, and they're probably going to charge a fee, which is this right here. Bank fees and service charges. If you see anything that causes a fee or a service charge and that wasn't recorded in the general ledger, that has to be subtracted from the general ledger. And most of the time, those will automatically or already be accounted for in the bank statement. So you probably won't have to do an adjustment with that. At any rate, those are the pillar topics for this video. We went over a lot. And before you go, make sure you check out our free 1-hour webinar training on SuperfastCPA.com. We will teach you the key ingredients to passing the CPA exam. We will teach you how to be efficient with your studying so that you don't waste months or even years of your time. Again, a big idea behind this is going through the questions to learn the material. Also, just a reminder, this video was only 5 questions, but SuperfastCPA CPA Pro members will have access to the full 10-question video when we post it in the members forum. So if you like this and you like our other videos, just remember that you can get more of it by becoming a SuperfastCPA CPA Pro member, and of course you'll get access to a lot of other stuff, including the Pro course, which is where we go really in depth on teaching you how to pass the exam. So make sure you go check that out. Make sure you check out the webinar. If you liked the video, make sure to like it and leave a comment. I hope this was helpful, and I will see you in the next video.